Everybody, it's Angelica again with emergingyou. Now remember, I am an enrolled agent, but I am not your enrolled agent. So please get with a tax professional or an attorney before you do anything. Everything in this video is for knowledge purposes only. It is not tax advice. Have you ever sold a stock, or maybe you're selling your home soon, and you wondered, what do you got to do about the profit that you're going to gain? Do you have to pay taxes on it? If so, how much? Well, we're going to go ahead and dive into it in this video. Let's get started. So, what is capital gains tax? Capital gains tax is when you have an asset and you sell it for more than what you paid for it. You're going to pay tax on the difference. So if you bought a stock for $1,000 and you sold it for $1,500, that $500 difference is what they considered a capital gain. And that's what you have to pay tax on. Usually this happens when you have stocks and bonds, real estate, crypto, collectibles like art, pictures, coins, or even classic cars. So you got to keep in mind though, you only pay your capital gain on realized gains. That means when you actually sell the asset. Unrealized gains is not taxable. If you haven't sold it yet, you are good. But as soon as you sell it for a profit, that is considered realized gain, and it is taxable. There is a basic formula on how they calculate capital gains. So usually it is your sale price minus your purchase price minus your expenses, and that should give you your capital gain. So you're probably asking, what is your purchase price, what is your selling expenses, and what is the adjusted basis? Let me go ahead and just put the formula on the screen for you so that you do have something to refer to. So there's two different types of capital gains you may hear about. You have your long-term and your short-term. Short-term capital gain is when you're holding it for less than a year. So if you held your stock for less than a year, you are usually taxed at the ordinary income rate. If you have long-term stock and you held it longer than a year, that rate is going to be depending on your income. So what I'm going to do is I'm going to go ahead and put a screenshot of the ordinary tax bracket and capital gains bracket here on the screen for you so that you have something to refer to. Now here are some capital gain situations that you need to be aware of. The IRS treats crypto as property, not currency. So every trade, every taxable event, it doesn't matter if it's going from crypto to crypto, it is taxable, okay? Collectibles. The highest rate of a collectible is 28% for things like gold or art. Some states tax capital gains as ordinary income. Others, like Florida and Texas, they don't have state tax. And the net investment income, otherwise known as the net, NIIT. That is an extra 3.8 surtax on investment income if you're a high earner. So these are some things you want to make sure you have in mind as you are going through the process of capital gains, or if you know that you have some capital gains that you're going to be using here shortly. Keep these situations in mind. Their home sale is always tax-free, which is not the case. Remember, the $250,000 or $500,000 exclusion only applies to your personal residence, and you meet the 2 out of 5 year rule. If you made any of these mistakes or are planning to have some capital gains in the future, make sure that you are putting some money to the side to help with your following tax liability. If you made any of these mistakes and you plan on having a big sale this year, I'm going to include a capital gain tax prep checklist in the description below. Go below. Download that checklist while it's there. It's going to give you more details on what documents to keep, tracking your basis, what else? Key timelines, tax saving strategies, all of these tips that's going to help you try to avoid paying those capital gains tax. if possible. And don't forget, if you have losses, that's okay. You can still use it to offset your other gains. So you can use up to $3,000 per year of capital losses to help reduce your ordinary income. While you guys are here watching, don't forget to go to my page and check out the most recent videos about tax credits, deductions, small business deductions. If you have a small business, if you drive Uber, if you have Lyft, if you file a personal tax return. It's a lot of great knowledge that you guys can find useful. So don't forget to go ahead and check those out. Now, keep in mind, there are some situations or strategies that can help you reduce or defer your capital gain tax. There are some ways. We're not going to go through it on this video, but maybe here shortly I will put a video out for you guys to refer to those different strategies. Now, that's going to wrap up this video. If you guys have any questions on capital gains, drop them below. Let me know. And of course, don't forget to like, subscribe, and comment something below. Let me know your thoughts on your video. It'd be great to hear from you guys. And don't forget, I have the Tax and Wealth chat room that you can join for all the tax tips that I drop. We have courses, we got ebooks, all the above. They're all in the description below, so check them out. And again, see you guys next time.